Welcome to the Capital News. I am your host, Alex Corretas. Today is June 10th, 2019. Thank you so much for joining me. My apologies for being absent the last week. I know I told you guys I was hoping to be able to do a podcast last Monday. I know I was traveling. I continued to be traveling. However, unfortunately, last week I suffered some internet difficulties and was unable to get linked up and was unable to provide some podcast material, which was unfortunate because we did have a slew of economic data come out. We did have a whole bunch of political mumbo-jumbo taking place. We had a Mexican standoff, which we talked about in today's geopolitical podcast. We're going to continue that conversation here, and probably over the course of the next, I would have to imagine, next few days, if not longer, because we never know what's going to come out of the president's mouth or Twitter account. And it's tariffs one day, it's no tariffs the next, it's back to threatening tariffs. So, it's a fluid situation. We have no idea what the president is obviously going to do at the end of the day. This calls into question some of the credibility, and I think this is going to cause maybe a little bit of a problem when it comes to the trade negotiations between the United States and China, and we're going to have that conversation here shortly. But what took place in the markets today? Well, the S&P gained 13 points. The Dow was up 78. The NASDAQ was up 81 points, representing about a 1% gain. The Russell 2000, the small cap index, gained 9 points. And the Dow Jones Transport gained 91 points, representing a 0.9% increase. And the New York Stock Exchange gained 36 points, representing about a 0.3% increase. Now, all of these indices here were well off of their highs for the day. There was a sell-off sort of at the end of the day. I know we had the Dow well in the triple digits earlier in the trading session. A lot of these markets were well north of, about 1%, 1.5% at their highs during the day. So to have that pullback, I think, is starting to call into question what we have been discussing here at the Capital News for quite a while, that these markets just really don't have much of a leg to stand on, that it is based a lot off of hope. And now we have sort of a dovish biased tone now at the Federal Reserve because we have the stock market throwing a hissy fit. They want their methadone, they want their crack, they want their heroin, they want their fix, and they're calling on mommy daddy Federal Reserve to give it to them. And it appears from recent comments from several members from the FOMC that we're probably going to end up cutting rates at some point here during the year. So quite the 180. I know we were talking about last year increasing interest rates. There was the policy 180, the wait and see, and now it really is going to be a 180 because I do believe that the Federal Reserve is more likely than not going to cut interest rates at some point during this year, which is a far cry from what we were anticipating at the end of last year, where the markets were anticipating perhaps, because this came from the Federal Reserve, that there might be a couple, maybe even 3, perhaps even 4, if things are really okay, interest rate increases. But, we've had these conversations here for the past few months as to why that's very unlikely going to happen. We're now going to continue with this wait-and-see mode, and we're probably going to go down lower. So this is a true travesty. This is a crime as far as I'm concerned. But nevertheless, this is the reality in which we live. Let me continue with the markets here. Oil, if we're looking at WTI, we're looking at $53.60 a barrel. Brent is at $62.48 a barrel. So oil, like we predicted here, folks, is continuing its decline. I just did not believe that the ascent in the price of oil that we saw from the beginning of this year was sustainable. I know there was a lot of people saying, well, yeah, oil's getting to 80, it's getting to 90, maybe it's going to hit 100 again. There was just simply no way this was going to happen unless there was some sort of hyperinflation or some sort of major geopolitical event that probably had to deal with the Middle East or maybe some huge escalation down in Venezuela. So again, the things that we have to look at when we're talking about oil is supply and demand. We have continuing surprises to the upside when it comes to the supply, which, how many times do we have to read off headlines where it says, well, oil inventories unexpectedly rose this week or unexpectedly rose this month? I think it's been about 10 straight weeks. If you go back and you look and you listen to these podcasts when we're talking about any type of oil inventory, it's unexpectedly up. It's unexpectedly up. How many times does it have to continue to go up and up before it's no longer unexpected? I mean, who's writing these articles? Who's doing this analysis that thinks it's going to be otherwise? Because the other side of the coin is the demand. And we know we have a slowing global economy. So this leaves two other pieces of this puzzle left, at least from a higher level standpoint. We have the strength or the value of the dollar, and we have geopolitical risks. Well, despite the fact that we are saber-rattling in the Middle East, despite the fact that we are basically staging a coup to try to throw over the Maduro regime down in Venezuela, oil continues to come down. So that really tells you something here, that the geopolitical risks, there's not a lot of weight from the marketplace saying, well, there's anything serious on the horizon. That doesn't mean that there isn't, but at least the markets aren't forecasting anything serious at this point. We have the dollar, which, a few weeks ago was really making pretty much yearly highs. Now, last week, it got decimated. We're going to talk about that maybe here shortly if we have time. But it wasn't enough really to catapult oil prices by any stretch of the imagination. And oil is something that we have to look at, too, as a leading indicator. This is something that sort of led the decline last year in Q3 and Q4, and we saw what happened with the 10 and 20% decline in stock prices. So don't be surprised if we see a very turbulent summer, because we continue to have deteriorating economic data come out almost on a daily basis. Yet somehow, some way, the last week, we saw the best week in the markets. I mean, do the math. I mean, this is the financial world of Oz, despite the fact that we had one hell of a V-shaped recovery for the record books, basically from the day after Christmas onward. It still wasn't the best week of the year. It was last week. You cannot make this stuff up. And of course, this was on the back of the president threatening more tariffs, not on China, but on Mexico. And then miraculously, and of course I'm sarcastic here, in the 11th hour, on Friday, this past Friday, a deal was struck with the Mexicans to indefinitely suspend the tariffs. Now, of course, this has to go to Mexico. The Mexican legislature has to vote on this deal. Of course, we don't know all of the details. Supposedly, Mexico has promised to send 6,000 troops down to their southern border to secure that border so we don't have a whole bunch of Central Americans and others coming into Mexico, which is going to make their way to the grand old US of A. So, again, you have to somewhat applaud Donald Trump for bringing the Mexicans to the table to get this done. The question is, did the president simply play us? Did he play the public? Did he play the markets once again? Because was this something that was already taking place behind the scenes? Because we have reports coming out from the New York Times and others that are saying, yeah, this was already basically in the works, and that the president just used this as an opportunity to get a win in his column. I wouldn't put that past the president. I mean, that's sort of his style. I mean, he loves to win. He loves to take credit for winning. He loves to take credit for being this great negotiator. And he loves tariffs. So all of those things check the box. Now the question is, how much of what was agreed to was really in negotiation before this took place? Was this just an expedited schedule? What's the case here? I don't want to go into all of the nitty-gritty, all of the mumbo-jumbo, because I don't think we'll ever know. Because the president is never going to admit fault. And what the New York Times does is what the New York Times does. And again, this is very dangerous, but this is something we discussed briefly on the Geopolitical podcast for today's episode. So be sure to check that out too, because again, this is going to be a continuation moving forward, because the interconnectedness of politics and economics and geopolitics, it just ain't going away, folks. Definitely no time soon. So we have to stay abreast on all of this stuff. So continuing, we have gold at $1,330 an ounce. I know obviously I was absent last week. Gold really rallied because we were looking at it down 1270s, 1280s. I mean, it catapulted. I think it made about a 14-month high last week at 1340 or so and has pulled back a little bit. So despite the fact that we were saying, well, what's going on here? We have a whole bunch of turbulence. We got a whole bunch of volatility. We had the market selling off for 5 or 6 consecutive weeks. Where's the flight to safety? I mean, it's a basic question. I mean, it's nothing that anybody should have been surprised about when we were asking that last week, or over the course of the last month, really. Where's the flight to safety? It just wasn't happening. Well, we got a little bit of a flight to safety in gold last week. And of course, I think that was probably more on the back of the dollar weakening than anything else. But nevertheless, there we are. We're north of $1,300. We'll continue to monitor this like we do on a daily basis, and we'll see what happens. Because anything can happen. Now, silver actually touched about $15 the other day, but it has pulled back, and now silver sits at $14.72 an ounce. Again, same question here. What's going on with these precious metals? Is there a flight to safety? I tell you guys, if you believe in precious metals, as I do, you buy low, you sell high. So if you're looking at silver, which I think is very undervalued, then, you got to buy some. If you believe in it. If you want some diversification, this isn't something that's necessarily going to make you the richest man in the world by any stretch of the imagination, but it is diversification. It is a hedge against inflation. It is a flight to safety. And when people really start to take a look at this stuff, when they get away from the mania of Bitcoin and all of these cryptocurrencies, which to me is more of a mania than anything else, it's really not fundamental. So when people get back to the basics and understand, well, you know what, well, let's look at the history books here. Let's look at precious metals and how gold and silver stand the test of time. Once people get educated on this stuff and they look at the price of gold and they say, whoa, $1,300 an ounce, I can't afford that, but $15 an ounce, yeah, maybe I can take a stab at that. You might really see a big run up in the price of silver. So that's just something to be mindful of. That doesn't mean it's going to happen tomorrow or next year. But, you have a little in your pocket. You put some in your personal safe or a safety deposit box, and you hang on to it. You never know what's going to happen. So it's just something to be mindful and to diversify your overall portfolio. Then if we're looking at the 10-year U.S. Treasury, we're now sitting at 2.15%, which was an increase today of about 3 percentage points. So there was some selling of U.S. Treasury bonds today. And we're going to get into a lot of discussion here because we obviously have to continue our conversation with the Mexican standoff. We have to talk about the up-and-coming G20 meeting in Japan, because what's going to happen there is President Trump going to meet with President Xi of China. Will they have any type of negotiation? Will they have a formal sit-down? Will it be informal? And then some of the recent comments that the president has been making in regards, again, to the Mexican standoff and to President Xi, because he gave an interview on CNBC earlier, and he made some interesting statements. I also want to talk about one of his trade advisors, Peter Navarro. Again, also talked about this earlier on the Geopolitical podcast, so be sure to check that out. But there's a lot to get to. But some of the other data that we have to get to real quickly here, we have the VIX, the volatility index is at $15.94, down 2%, still below $20. I think if you're looking at the 20-point level, to me, these markets aren't done selling off. They're just not done selling off. I think we're rolling over when we look at a lot of these things. The VIX, that's why I talk about this on a daily basis. That's why it's part of our mix up here, because it's something that we have to pay attention to, because it's the fear gauge, it's the volatility index. We have to know where these markets stand. We have to know where they're likely to be headed. It's a big bet to short the VIX. There's a lot to it. Don't want to get into it right now, but the fact that it's under 20 with so much poor economic data is really beyond me. It really is. So anytime I see it below 20, I'm still saying that these markets, they're overbought. They're clinging to hope. They're clinging to hope, and as I always say here, hope is not a strategy. So some of the other data here that came out last week, we had the jobs report, and it was a whopping 75,000 jobs. 75,000. We were expecting about 175, 180,000 jobs to be created in the month of May, but oops, nope, didn't happen. 75,000 jobs. Did we hear a word of this from President Trump or his administration? Not a peep. Not a peep. Did we hear anything about the largest Chinese trade surplus against the United States last year? Did we hear anything about that from the president or his White House? Not a peep. A bunch of crickets in the desert. That's all you heard. Absolutely nothing. But despite the fact that we had 5 or 6 consecutive weeks of market selling off, last week was the best week of the year. And guess what? President Trump took to Twitter and said, best week of the year in the markets, patting himself on the back because he threw the markets into a tailspin, into a tizzy by saying, look, I'm going over to meet the Queenie baby for that state visit, but guess what I'm going to do? I'm going to slap 5% tariffs on Mexican exports to the United States. You know why? Because I feel like it. Because we got a southern border crisis. We got illegal immigration. We got drugs. We got human trafficking. We got sex trafficking. And I'm the tariff man. And that's exactly what I'm going to do. And of course, that brought the Mexicans to the negotiating table. Of course, we were told that there's no deal yet, but we're negotiating. You had mixed stories coming out. You had from the Mexican side, you had them coming out and saying, well, it's going to be possible that the United States is going to delay the tariffs as we continue to negotiate. Well, guess what happened when we heard that news? The markets took off. They skyrocketed when we heard that news. And then what came out, not during the trading session, but after the trading session, after 4 p.m. Eastern Standard Time. Guess what we heard from the White House, from Mike Pence? Now, that's not true. We're going to put the tariffs back on them. You can't make this stuff up. You cannot make this stuff up. Do not tell me that these people are not manipulating these stock markets. Do not tell me that they are not focused on the S&P 500 and on the Dow Jones Industrial Average. Don't insult me and don't insult yourself. This is what they're paying attention to. You think it's just a coincidence? The Mexicans come out and say, well, we're going to delay them. The markets skyrocket. They rally. And then after the markets close, that's probably not true. We're probably going to continue with the with the tariffs. And then, of course, who flies home for the 11th hour deal but nobody else but Donald Trump? Boom. The tariffs are indefinitely suspended because we made a deal. You can't make this stuff up. You just cannot make it up. So here's why this throws a wrench, I think, into the negotiations with President Xi and the Chinese. Because despite the fact that we supposedly struck one of the greatest deals ever, the USMCA, which is NAFTA 2.0, Donald Trump is still willing to attack those partner countries, Mexico and Canada, in this instance, Mexico. We negotiate this fantastic, beautiful, one of the best deals ever. Of course, these are, the president's words in regards to the USMCA. Yet he's still willing to go back and hit them. You have to understand, ladies and gentlemen, that Canada and Mexico are two of our largest trading partners. This should be no surprise. These are our neighbors to the north and the south. This is commonplace. Whoever you're closest to is who you're probably going to do most of your trading with. That makes sense. So there's no surprise there. So this has to become a part of the calculus now for the Chinese government, because they're going to say, well, look, Trump just negotiated this deal, this USMCA with the Canadians and the Mexicans, and he's still willing to put on more tariffs on one of those partner countries, which is his neighbor. If we, the Chinese, strike a deal with the Trump administration, with the United States of America, who's to say that something isn't waiting in the wings somewhere that we have overlooked that is going to upset or disturb this president or somebody in his cabinet or in his administration who has his ear and says, look, Donald, you got to go back at the Chinese. We don't like what they're doing here. And now we have this theoretically, we have this fantastic deal with the Chinese, and now, boom, something comes out of right field, and now we have to go back at the Chinese. Who's going to trust him? How are the Chinese going to know that the president, Donald Trump, is not going to do the same thing to them, which he just did to the Mexicans? Because I highly doubt that the Mexicans thought that the president was going to come back at them with additional tariffs, because they just struck a deal for the USMCA. Now, of course, the USMCA still has its political hurdles. It still has to make its way through Congress. But nevertheless, is that how this president is going to negotiate? Because given his interview on CNBC, he was asked if he will be meeting with President Xi at the G20 meeting in Japan later this month. And he says he has every intention to. But he was also asked a question, well, what happens if President Xi does not show up? Because I guess there are some reports out there that are claiming that he might not even come. Well, he says, well, if he doesn't come, then I'm going to put the tariffs on. I'm just going to increase them. That's just no doubt about it. That's what I'm going to do. So this is getting very interesting because Donald Trump now is once again playing the strongman. He's thumping his chest, sticking his nose down, and you have to ask yourself, what is the standpoint? What is the perspective from the Chinese? Because the Chinese have their strongmen too. You have President Xi, who is basically a dictator for the rest of his life. He is basically the quote-unquote king of China for the rest of his life, barring some sort of event. He gets his way. You think he doesn't want to be portrayed and come off as a strongman to the leaders within the Communist Party, to the members and the citizens of China? You think he's just going to allow the United States president to say, well, look, China has to make a deal. China needs to make a deal because they're just getting decimated economically. You think he's just going to sit there and now come back to the negotiating table to strike a deal, given that language? Because you have to look at how the president, Donald Trump, behaves when Nancy Pelosi or other Democrats make comments that the president doesn't like. He calls off the negotiation. So why wouldn't President Xi call off the negotiations or just simply say, I don't want to meet with President Trump at the G20, or maybe he doesn't even show up at all, or maybe he plays nice. Donald Trump can say there's going to be a trade deal, and then nothing happens again. And if that happens again, this president loses all credibility because he's been stringing along the American people and the stock markets with it for the past 5 months, 6 months. And of course, those trade negotiations blew up. They blew up. And now we have more tariffs on the Chinese, and the Chinese have more tariffs on us. So this thing can get very ugly very quickly. And again, I don't put a lot of weight on these trade deals and all this trade between the United States and China. But this is a narrative. This is a story. This is something that the markets have been clinging to for the past several months. So it's not going to be any surprise if we see either a huge rally to the upside in the event that there is a continuation of trade negotiations and an actual deal. I mean, this market will probably make new highs. Or if these talks really collapse, truly collapse, because despite the beautiful letters and all of these great, fantastic things of being great friends, there is no more negotiations, then these markets are going to sell off because this was the last hope. Well, it was one of the last hopes. We're going to get to the other one here real quickly. The other last hope is the Federal Reserve, once again coming to the rescue. This is a crime, ladies and gentlemen. There's no ifs, ands, or buts about it. This is a crime. The Federal Reserve has a mandate. It has a dual mandate. We talk about this all the time, but I will talk about it all the time here because this is so important. And when we have new people coming onto the show, it's important for them to understand this too and to spread the word to their friends and family and complete strangers, for all that matter, because a lot of people don't even know the Federal Reserve exists, let alone what they do. They have a dual mandate: full employment and price stability. Well, despite the fact that we had a weak jobs number in May, 75,000, we're still at 3.6% on the unemployment rate. We're still at 3.6%. That's a 49, 50-year low. So the Federal Reserve can check the box. They can check the box. They pretty much have full employment by their own figures, okay? On the other side, price stability, okay, we're going to gauge this by the inflation rate. Well, they're telling us inflation is 1.8, 1.7%. It's south of 2%. Well, that's pretty stable, okay? The lower the number, the more stable prices are. So they should be able to check both of their boxes when it comes to their dual mandate. Now, why do they have anything to do with the stock market and with the financial markets and with financial assets? It's because they interjected. It's because they've been involved for the past 10 years. It's because they've been giving methadone and heroin and crack to the crack addicts on Wall Street, and it's being taken away from them. And they don't like the fact that all of this poor negative economic news just keeps coming out and keeps coming out. And they say, oh, please come save me. Give me another hit, man. Just give me another hit. I'll be okay. And lo and behold, that's probably what we're going to see happening from the Federal Reserve. Now, it was very interesting because last week, a lot of that rally was predicated on the fact that there was a lot of dovish tones and a lot of dovish signaling coming out of many members from the Federal Reserve saying, well, we're We're prepared to act. We can do things. There are tools in the toolbox and all that crap that they always come out and say. And we can lower interest rates if we have to. We can act. Because this was obviously on the back of the Mexican standoff and all these tariffs. Well, the tariffs are gone. The tariffs are indefinitely gone. So that's something that the Federal Reserve, I guess, no longer has to really worry itself with because they're indefinitely suspended unless the Mexican legislature doesn't pass whatever was agreed to and the 6,000 Mexican troops just don't do their job or they can't do it and the president isn't satisfied. Well, then we don't have to worry about any type of tariffs coming on. If those 6,000 troops can do their job, then we don't have to worry about the president coming back and saying we're going to put another 5%, 10%, 25% tariff on Mexican goods coming into the United States. So the Federal Reserve doesn't have to worry about that. They can check the two boxes for their dual mandate, and they don't have to worry about the Mexican tariffs. Chinese trade they've known about for a year. They've done nothing with it. They've actually continued to increase interest rates. And now they're in wait-and-see mode. So, what is the purpose of cutting interest rates? Because according to President Trump, this is the best economy ever. We had a 3.2% GDP figure for the first quarter of 2019. We have a 3.6% unemployment figure. We have low unemployment. We have the president and his administration coming out and saying tariffs are the best thing for this country. We got companies coming back. We got billions of dollars coming in from tariffs. What else do you have to do? So why would the Federal Reserve have to cut interest rates? Well, there's no recession on the horizon as far as they're concerned, as far as everybody else is concerned. Everything's great and fantastic. So why would you have to cut interest rates? And why would you have to embark on quantitative easing number 4? That's an emergency measure. Everything's fine. What are you worried about? So this is the world in which we live. This is one of my biggest concerns, that the Federal Reserve cuts interest rates, maybe even embarks on quantitative easing number 4, and there's no juice left. Stock market, maybe it gets an initial jump, an initial high, an initial kick of adrenaline, and then it completely collapses. Because what will be left in their toolbox? Absolutely nothing. Absolutely nothing. They might come up with something, but their credibility is going to be completely shot. That's why I'm big on credibility. The Federal Reserve has no credibility as far as I'm concerned. They're just being led around by Wall Street. If they throw a hissy fit and they say jump, they ask how high. That's not how it's supposed to work. I don't want the Federal Reserve to exist. End the Federal Reserve. It's a crime. And now you have the president coming out and saying that they should lower interest rates and embark on quantitative easing number 4. That's a crime. That's manipulation. That's theft. We have these conversations here all the time. You better understand it. I'm beside myself. This is a tragedy. There's no credibility here. I voted for this president because he was saying the right things about the Federal Reserve when he was a candidate. That low interest rates and quantitative easing was destroying this country. That it was a huge wealth transfer from the middle class to rich people like himself. And now he's calling for that same flawed, fraudulent, criminal policy to be enacted. Because he wants to continue to say that the Chinese, their central bank is bailing out their government, but ours isn't because it increased interest rates. This is a crime, ladies and gentlemen. I don't know how else to put it. And it's with our money, by the way. It's with our future, by the way. It's with future generations, by the way. Do you care? Or are you just sticking with your guy because he's a Republican and you voted for him? Or are you just sticking with your Democrat because you're a Democrat and that's what you voted for? You got to take the blinders off. You got to pay attention to who really has the power behind the curtain. And this is it. I don't know what else to tell you, because if they cut interest rates again, if they embark on quantitative easing again, it will decimate the middle class in this country. This is not an exaggeration. This is not hyperbole. Look at what's going on around this country for the past decade because of low interest rates and quantitative easing. It has destroyed the middle class. Why do you think Donald Trump is the president? You wouldn't have a figure like Donald Trump as the president if everything was A-OK. If everything was A-OK under the Obama administration, Hillary Clinton would be the president right now. I wouldn't want that to be the case. Believe you me, she should be locked up. But if everything was fine, if quantitative easing and low interest rates was such a great policy, and everything was great for middle America, then you would not have Donald J. Trump as the president right now. So for him to come out and say that the Federal Reserve needs to continue with low interest rates and quantitative easing is a crime, and I cannot and will not stand for it, and neither should you. We'll continue this conversation later in the week because there's a lot of other good stuff to get to. We still have to look at our leading indicators with copper, with oil, with aluminum, with lumber. We had an interesting interview on the news the other day with Stanley Druckenmiller. I know I talk about him quite a bit here. We're going to follow up on that. I have to still get with some other comments from Donald Trump and some of his trade advisors, Peter Navarro, because there's a lot to get to. But thank you so much for joining me again. I'm very glad to be back. Again, I have my apologies to you guys for missing out last week, but I am here, and hopefully I do not run into any further internet disruptions throughout this week. So stay tuned, and hope to see you guys back here again tomorrow. This is the Capital News. I am Alex Kreitis. Godspeed.